Good afternoon. This is Market View Tech Talk. Thank you for joining us. My name is Lungilele Makakula. Today on our program, we bring you an important update from the Eswatini Revenue Service concerning the implementation of the Income Tax Compliance Certificates Regulations of 2022. The ERS will be explaining the simplified procedures for obtaining a tax compliance certificate, commonly known as a TCC. This update is part of ERS's ongoing efforts to support taxpayers while ensuring smooth compliance with national tax laws. To expand on this topic is ERS Director Marketing and Communications Ndobeko Manana and Manager Taxpayer Education Nkosi Mahlalela, who will break down what these changes mean, especially for small businesses, larger taxpayers and anyone currently facing compliance challenges. For now, let's go straight to our business news. In our first story, the call for proposals for the Micro, Small and Medium Enterprises Renewable Energy Program under the Catalyzer for Renewable Energy Transition in Eswatini initiative has been announced. Speaking in Babane, under Secretary Technical at the Ministry of Natural Resources and Energy, Kapsile Mabuza, said the program aims to unlock about 100 million Malangeni in financing for MSMEs. The project is supported by the European Union through the Ministry of Economic Planning and Development and implemented with the Ministry of Natural Resources and Energy, UNDP and Catalyze Eswatini.
To emphasize that CREATE does not provide direct funding. Instead, the program offers technical support to strengthen project viability, facilitate access to finance, and create an enabling environment for renewable energy investments. The focus, therefore, is to build sustainable, finance-ready businesses. MSMEs are the backbone of our economy, and their sustainability is critical to national development. Rising energy costs continue to affect business competitiveness. Hence, CREATE is designed to address this challenge. The program supports the shift towards clean, reliable, and cost-effective energy solutions. The aim is to receive 1,000 applications from viable, bankable MSMEs in targeted sectors. From these, we expect 320 business plans to be developed, 250 MSMEs to access blended finance from local financial institutions, mobilization of approximately 5 million euros, which is about 100 million Malangani in debt and equity financing. This demonstrates the scale and seriousness of our commitment to enable private sector participation.
European Union Program Manager Begani Magongo says micro, small and medium enterprises are facing setbacks as rising electricity prices erode their profits. He emphasizes that the partnership with government and the UNDP is designed to ensure micro, small and medium enterprises are supported to become energy sustainable, helping them thrive despite these challenges.
Ekusebenzeni kwethu konke sikhanzile ukuthi lama gains lekufanele singabe atholwa kuleli Swati lesithi are intended ukuthi agcine azuze leSwati ngalinye nangalinye. Asikhona lokuthi sigcine siwatholile lawo ma gains lawo, and inkinga lenkulu ibe senzabeni ukuthi ama costs agas ayinyuka kakhulu, and kulokwenyuka kwawo kukhona lekufuna ukuthi kwendeke. So ngaleyo ndlela ke sibe sesiyabuka lokuthi singakusebenta kanjani, and siyabonga lokuthi sigcine sakhe buhlobo lobutabang lobuhle lobuqinile lobutawubenefita emaswati ikakhulukazi nenhlangano ka-UNDP.
Kholiwe Mdluli, irrigation engineer at the Ministry of Agriculture, adds that In assisting micro, small and medium enterprises with irrigation, they have observed that electricity-dependent water pumps often operate slowly due to high energy costs. She highlights that this project provides much-needed relief for smallholder farmers, enabling them to increase productivity without being burdened by electricity expenses.
Smallholder farmers sa-observe lothi sinema-challenges kulama-projects lokhanzako ukuthi mhlambe basetile balimi labancane kokuthi banisele lawa lafaka logezi ekuphamba sibonile lokho ukuthi ayachubeka hamba abe nekufadabala ngoba logezi
United Nations Development Program's Mangaliso Mohammed, who is the Sustainable Development Specialist, says the initiative strengthens the country's sustainable energy efforts. He notes that supporting small-scale businesses is central to their mission, as these enterprises play a crucial role in job creation and economic growth.
Indzaba yasomabhizinisi lomncane siyibuke kakhulu eveni ngoba siyati ukuthi if bosomabhizinisi bakhona ukuthi amabhizinisi abo aphumelele emaswati lamaningi atokhona ukuthi athole emathuba emsebenzi nemkhiqido nje eveni ukhona ukuthi unyuke phinze kunalendzaba ye-climate change. Le project lena futhi iyasifaka sandla lesikhulu lapho ukuthi sendena kulesithi si decarbonize our economy siyenda ukuthi i-economy yethu ibe ngilelo hlobile.
The Undersecretary Technical at the Ministry of Natural Resources and Energy says a detailed application information will be shared across various platforms, including media adverts. Reporting, Nelson Langamandla with Vuminkosi Nzinisa Babane.
Today, the Central Statistical Office released the quarterly gross domestic product report, and it shows that the year-on-year seasonally adjusted 2025 Q4 shows growth of 5.7% compared to a growth of 1.3% in the previous year, which is 2024 Q4. The office states that the primary sector contributes 8.1% to total industries in the fourth quarter of 2025 and shows a growth of 2.6% on the year-on-year basis. The realized growth was due to animal production, which grew by 4.6%, and mining by 6%. The secondary sector contributes 35.6% to total industries, indicates a growth of 0.5% in 2025 Q4 year-on-year. The realized growth in this sector is mainly due to construction, which stood at 11.8%. Lastly, the tertiary sector contributes 56.3% of total industries and shows an overall increase of 9.9% in 2025 Q4 year-on-year. This increase was mainly contributed by the following industries: wholesale and retail 15.5%, information and communication 16.8%, and financial and insurance activities 26.5%. The Eswatini Investment Promotion Authority, APA, is urging local businesses to participate in interviews for the development of a comprehensive traders directory to strengthen business linkages and boost global competitiveness. Tandika Dlamini, Manager External Trade at APA, says interviews with traders will take place between March and May this year to gather critical business information for accurate representation in the directory. This initiative supports private sector growth by creating a centralized platform with information on local traders, products, services, and business activities. The directory will connect Eswatini businesses to regional and international markets, increasing visibility and trade opportunities. APA states that participating businesses will gain access to new markets and valuable trade connections. The directory reflects APA's commitment to a dynamic trade environment and leverages the International Trade Center for maximum impact. And that's it for our business news. Stay with us, Ndobego and Ekwelenkosi join us after the break.
Those that are in pain must forget all the problems they have. Because the things of the earth have got no answer. But the answer that we have is all morning. When I'm preaching here, I'm preaching to myself. I receive the Holy Spirit.
I declare that a turnaround is coming my way.
Turnaround is coming in my life.
Welcome back. Thank you for tuning in. You're watching ARS Market View Text Talk. We are now joined by Ndobeko Manana and Ngosi Mahlale to bring you updates on the TCC regulations. A very good afternoon. Thank you for joining us, ladies. Well, yeah, Ndobeko, let me start with you. Just give us updates on the implementation of the TCC regulations we had on previous seasons.
A very good afternoon to you, Lulu, and to our viewers at home. And as usual, thank you so much for the opportunity to always update our clients on all things ERS. So today we are back to continue the conversations around the TCC regulations, and also just to highlight that, in fact, since the implementation or the enforcement date of the 2nd of March, the ERS has been working tirelessly in the background to make sure that we educate our clients on the regulations, the new regulations, but also ensuring that on our side we're making it as seamless as possible and as convenient as possible for our clients to access the TCC. So there's been several initiatives that we've rolled out since implementing the regulation, and a number of initiatives that assist our clients to be able to get back on track. And we're here today just to talk a little bit about those various initiatives.
Yeah, elaborate on these initiatives. What are these initiatives that ARS has in ensuring clients are supported towards tax compliance?
Good afternoon, Lulu. Good afternoon to our viewers as well. Thank you so much for the opportunity. We are always grateful. So yes, indeed, since the introduction of the TCC regulations, as Ndobeko has highlighted, we are very intentional in assisting our clients to walk the journey of compliance and partner with our clients. First of all, the ERS has decided to kind of do a phased approach in terms of implementing the enforcement of some of the transactions that are listed within the regulations. One of which is the one that speaks to the requirement of a TCC when procuring or when tendering for goods and services above the tune of 20,000 emalangeni. In this requirement, the ERS has decided that we will delay the enforcement of the requirement of a TCC when procuring goods and services above 20,000 emalangeni when you are tendering with a small business. A small business, in our instance here, we are talking to businesses that are making annual turnover of 0 emalangeni to 500,000 emalangeni in a year. So what this means, Lulu, really is that if you are tendering or if you are buying from a small business during this period until the 31st of March 2027, we don't expect you to require a tax compliance certificate from the small business. Yes, we are literally giving an opportunity to our small businesses to put their house in order when it comes to the issues of being tax compliant. During this time, we want to give them an opportunity to, first of all, Lulu, register. We understand that some businesses, because maybe they are trading or they're operating at a very small scale, they didn't see the need to register. They didn't even know that they are required to approach the ERS and be registered. But during this time, we're saying this is an opportunity for our clients that are in business, whether in a very small scale, to come forth and get registered. What we'll be doing during the time of registration, there's a very simplified income tax regime that we introduced, which is solely meant for our small businesses, which is called presumptive tax. That is where we will be actively enrolling them in. In this regime, we are saying if you're making 0 emalangeni to 50,000 emalangeni in a year, you will be taxed at 0%, meaning you won't be paying any tax. But if you make an annual turnover of just about 50,000 emalangeni up to the tune of 500,000 emalangeni, you'll be taxed at 1.75%.
10%, and this is based on turnover. So during this time, we'll really be engaging our clients, educating them on record keeping, the importance of submitting their returns on time. So, but all we are saying is that please do not require a TCC from a small business, but of course, provided that they do not have outstanding tax obligations. And the ERS is available to assist our small business during this time as to how do I get on track, how do I get back on track and ensure that I'm tax compliant. Come 31 March 2027, everything is in order. Now when the regulation starts to apply, even also to our small businesses, we want to believe that during the time, everything will be kind of like smooth.
Yeah, great initiative indeed by the ERS. Hopefully businesses will appreciate it. So, Ndobeke, coming back to you, what else is the ERS doing to assist businesses to get back on track to ensure that they are tax compliant?
So Kabalongosi has highlighted what we have introduced for our smaller businesses with a threshold of 500,000 below. We've also included an initiative for businesses earning an annual turnover of 500,000 and above to say, Nakona, those businesses, we want to support you in ensuring that the people or the organizations they work with are tax compliant. So ERS has been working very closely with procuring entities to assist them in streamlining this tax verification process. When we first introduced these regulations, there was quite some concern from the business fraternity to say ERS is now adding an extra layer or an administrative burden on our side to check for compliance with the service providers that we utilize. So what we are saying as ERS is we're encouraging these entities to share their supplier databases with us, and we will do the checking and the verification on our side. We're also working closely with the banks as well in regards to the funds transfer regulation. Again, we are working with the banks to assist with the verification of compliance on our end. So we really are trying to make sure that we make this compliance journey as simplistic as possible and not add any extra layer or any frustration to our clients. But I think the most important or key message that we as ERS are saying to our taxpayers is just ensure that you maintain a tax compliant status at any given time. So if there is a requirement to produce a TCC, you aren't frustrated, there aren't any delays in doing so. But I also think it's important for us to highlight that those clients that find themselves in a non-compliant status, there are programs that we have at the ERS that can support those clients to make sure that they're back on track, and we'll talk to what those programs are.
As Ndobeke has emphasized on the importance of maintaining a compliant status. So then what happens to non-compliant clients? Does the ERS assist them in keeping up to date?
Yeah, definitely, Lulu. I think one would also like to highlight, even before I get into the programs, that the regulations, at the heart of the regulations is not just the certificate as a document, is tax compliance. It's really maintaining a tax compliant status. And we understand that there could be some difficulties that would maybe cause a business not to pay their taxes on time, or maybe they don't even afford. Hence, the ERS has come up with initiatives, one of which we have termed it Sonzela's Kulume. Literally, saying, come, let's have a conversation. First of all, file all your returns so that you can accumulate the tax debt, and then come, let's sit and have a conversation how you can best, approach or pay up your tax debt. In doing that, we will agree on payment terms, meaning you'll pay in installments. I wish to highlight to our clients that once you've signed that payment agreement, please adhere to the agreement. If there are any challenges, still approach the ERS. Don't only come when you want to sign up the arrangement, and then when it's ongoing, you are having those challenges, and then you go and you're not, communicating with the Eswatini Revenue Service. In that way, it will be as if you're now deviating from the agreement. Yet, when you are upholding any, for as long as you are adhering to the agreement, you are a tax compliant client in our eyes, and you deserve a tax compliant certificate. Meaning you could still be owing, but for as long as you are servicing a payment arrangement, you are a compliant client, and you will be receiving a TCC, so that whenever there are opportunities to tender or whenever you are required a TCC, you can simply just access your TCC. Another program which we have termed voluntary disclosure program. Literally here we're saying, could happen that in the past maybe you didn't disclose much or in full or accurately in terms of the income that you've accumulated. We are saying it is different when the ERS is the one that then picks that there's a discrepancy, or when we're now doing an audit. Where if you are the one who approaches the ERS and say, you know what, yes or and so, it happened that when I did my calculations, I then did not submit in full. The conversation really will just be different. You might even find, in terms of penalties, ERS was the one who then picked that discrepancy. So we really would like to encourage our clients. We are saying let everyone who requires a TCC get a TCC. Hence, we are very intentional in making it possible. And I wish to encourage our clients that let them give themselves and ERS a chance, so that we treat their problems or their encounters case by case. When I was owing a ERS, this is what happened. Come to the ERS. Let's have a conversation about your tax account. Let's treat your account case by case. And definitely.
You know.
Hence, this one's the last clue. Come forth. Let's have a conversation about your tax account, and we'll agree on payment terms that will best suit you.
All right. All right. And Ndobeka, remind us again how and where to get the TCC.
So the ERS has made it very simple to access the TCC and quick as well. In the past, our clients would need to visit our service centers and manually retrieve a TCC. But we've created platforms such as our website. Our clients can visit our website on www.ers.org.za. Search for the Instant TCC tab on our homepage. Click on it, it takes you to a page that then wants a bit of information. So if you are looking for your TCC as a business, you populate your tax identification number, your email address, and all of that. But if you're looking for your TCC as an individual, ufagi pin yako. And your TCC is emailed directly to you. In less than 5 minutes, you're able to access it. But if you are not, and this is for compliant taxpayers, but if you are not compliant, you will also be alerted. But I'd like to add how in the background, there are teams that are just checking e-system yet. And when there is anyone who has been declined, they immediately are calling them to say, we see you tried to apply for a TCC here and the system didn't approve it. How can we assist and bring that client into the ERS, getting assistance from ERS. So you can access it on our website. You can also access it on our ERS TaxPal app and follow the same process there. So we've really tried to ensure that we digitize the process, and it's one of the reasons why we delayed the enforcement. Remember, these regulations were established in 2022 or gazetted in 2022, but it is only this year that we are now actually enforcing, because we wanted to make sure on our end the process is as seamless and as convenient as possible for our clients.
Yeah, great. Parting message, Debo, in just a minute.
Thank you very much.
Message to your clients.
Thank you, Lulu. To our viewers, I'd like to highlight that the ERS is not just only about enforcing, but we are very committed in partnering with our clients whilst they are walking the compliance journey. Do approach the ERS. We are available to assist you and help you get back on track so that you are tax compliant and you get the TCC.
All right. Thank you, ladies. Thank you for coming through. Well, there you have it. Masat Lamahle. For more information, to contact the ERS service centers for more information. Let's go for a break. We come back with our local economist, Annelies Bia.
To all the viewers of Eswatini TV in the kingdom and beyond. Eswatini TV is regulated by the Eswatini Communications Commission through the Broadcasting Code and Broadcasting Guidelines. Under these instruments, the station commits to broadcasting information and news that have been fact-checked, programs and content in respectful language with no elements of hate speech, violence or sexual activity. If you hear any unsuitable content on this channel, you have a right to voice your complaints with the station management. Should you not be satisfied with the response or action taken, you can escalate your matter to the Communications Commission at PO Box 7811 Babani call 2406 7000 or send an email to info@escom.org.za. For more information, visit www.escom.org.za.
Welcome back. Thank you for staying with us. This is our final segment for today's episode. We now connect with Sanele Sibiya, in-house economist, for today's market analysis. Good afternoon, Sanele. Thank you for tuning in. What's happening in the world of markets today?
Thank you, Lungelele. Good afternoon to you and good afternoon to the viewers. So markets today are somewhat oscillating between optimism over the opening of the Strait of Hormuz and, a bit of doubt over the fragility and the robustness of that ceasefire that we saw in the Middle East a couple of days ago. So when you're looking at the U.S. markets, you can see that before the news and the fragility came back into the markets, the U.S. markets were somehow really on a bullish mode, with the Dow Jones Industrial Average gaining 2.85 percentage points in yesterday's trade, and the Nasdaq Composite Index gaining 2.80%, and the S&P 500 gaining 2.51%. Now, that was before we started seeing the cracks really emerging out of that ceasefire. That was before we saw, Israel continuing to bomb on Lebanon, and then with Iran taking a track back, they're saying if hostilities are still continuing in Lebanon, then there is really no path towards a lasting peace solution. So now that's what markets are trying to ramp in. So if you look into the European markets, now that's where this doubt really begins to show, because it actually occurred while those markets were still in session. There we're seeing the FTSE 100 losing 0.36% percentage points, the DAX losing 1.9% in trade, and the CAC 40 losing 0.88 percentage points in today's trade, largely due to the fact that we are seeing that fragility in that ceasefire coming through from what Israel continues to do and what Iran somehow thought this peace deal entailed. So there is a bit of that fragility, and it also carries through to the Asian markets, where we're seeing that the Nikkei was climbing, almost getting back to those 56,000, 57,000 levels that we were used to before the war, but the fragility then came back in, and we saw the Nikkei losing 413 points in today's trade. The Hang Seng in Hong Kong lost 140 points, and the Shanghai Composite Index lost some 28.83 points. Now, that's largely due to the fact that even though we are seeing ships moving out of the Strait of Hormuz, but the traffic is still very much limited, and the fragility around the ceasefire makes it a bit more difficult to predict. Coming into Johannesburg, earlier on in today's trade, before those cracks started to show, the Johannesburg Stock Exchange was trading very much close to the 120,000 mark. They were trading at 119,000, very close, just a few points shy of the 120,000 mark. But when we started seeing those cracks on that ceasefire, the Johannesburg Stock Exchange lost 1,046 points in today's trade. Coming into the commodities, gold was beginning to rally. It was up to the $4,765 per ounce there, because once we get rid of this uncertainty coming through from the oil futures, now that somehow tempers off on inflation expectations, and then that meant gold was going to be more of that gainer in terms of value. But what we then saw was the price of Brent crude moved from $92 per barrel to $98 per barrel when we started seeing the fragility around the ceasefire. Now that caused gold to move back down a bit. And then in terms of currencies, the Lilangeni is relatively stronger across all major currencies. We are trading at 16 emalangeni 40 cents per dollar and trading at 19 emalangeni 20 cents per euro and trading at 9 yen 60 per lilangeni. Now that's driven by the fact that once that fragility moved out of the markets and you are seeing the return of capital to emerging markets. But right now, with the fragility again, that's why we are starting to see the numbers tapering down, showing that the lilangeni has lost a bit of ground. But overall, we are on good footing. Thank you, Lungilele.
All right, thank you, Mrs. Bia, for that analysis. Well, we've come to the end of our program today. Thank you for tuning in on today's episode. If you've just joined us, you can still watch this episode on our YouTube page. Otherwise, we'll see you next week, Thursday, at exactly at 2 p.m. Enjoy the rest of your day.